Brent, your words, investors and the three camps they fall into right now, those worried the economy is growing too fast, those worried growth is peaking, and those worried stock valuations are simply too high. Are you in any of those three camps right now, Brent?
No, it was something we worried about. So we got to May or June, and economic growth was finally strong. COVID cases were declining, and we all sat around and thought about what is next. And I think as you've kind of been tweaking Lisa just a bit, people were worried about those three things occurring. That was where the worries were. We see each one of those subsiding as you move towards the end of the year. And that to us means a higher equity market led by more cyclical aspects of the market. So think value stocks, think small cap stocks, and think the Eurozone. And so we do think there's room left to run. It's just you've had this defensive versus cyclicals. Defensives have really won the day over the summer, but I think it's because of those three worries. And I think each one of those three pulls back into the end of the year. And I think that's the impetus for the rally that we expect to occur.
Brent, let's try to put some quantification around how much room there is to rally. What kind of returns are you expecting, are you shooting for with the likes of a small cap bet at this point in the cycle?
Well, I mean, I think everything's less than it was before, correct? And so if I think back to last year, we went overweight equities with an uncertain outcome, but the opportunity set was so wide. I think about today, I'm a bit more certain about what the economy holds pushing forward. There are still, as always, uncertainties, but the opportunity set is smaller. And so I think about relative performance more. And I think small caps are set to outperform their large cap counterparts. And the Eurozone is set to outperform probably both of those. And so much, much more muted returns. But still, in the context of a 10-year treasury, as you opened the show at 132, 133, whatever it is today, stocks are still a relative valuation advantage towards bonds. And that isn't changing until the 10-year treasury changes. And that's still where central banks are impacting the most.
Well, Brent, I'm glad you brought that up because we were having a conversation in the previous hour about big tech and how it was kind of unusual that we had record highs for the FANG stocks yesterday on a day when yields actually rose. But when we saw the low for the NASDAQ 100 this year, it was on March 8th, and the 10-year treasury yield was at 160 on that day. We are still 25 basis points below that. So can you make a case really against big tech if yields kind of stay in this range?
Yeah, I mean, I think it's more of an economic growth and what's keeping the treasury in that range. And so is it tapering? Is it distortion? Is it just a lot of liquidity around the globe? I just think the small cap and the cyclical trade to me is more tied to strong economic growth that I think people were worried about plateau or peaking. If anything, it's a plateau. You have companies with huge amounts of new orders, huge backlogs of order, and low inventories. You have consumers with incredibly strong balance sheets who've probably been pushed out just a bit because of what Delta has done. And so I think you continue to see economic growth that remains strong. I'm not for sure what the 10-year treasury does. I expect it to have an upward bias as tapering is announced. But I think all those things point to an economic cycle that lasts just a bit longer and is a bit higher for a while. And valuation, which I think many economic cycle investors are ignoring, still points to small caps and value stocks as being cheap relative to their counterparts.
Brent, you mentioned small caps over large caps. You mentioned cheap. A lot of people would say Europe cheap to the United States, and we've said that for a long, long time. You touched on the Eurozone and talked about the potential for outperformance there. What do you like about Europe, Brent?
It's much more cyclically inclined. And so the setup of the index is much more cyclical in nature. Europe's been cheap for a while. It was in need of a catalyst. It actually has that now. The central bank there has done things, quite frankly, that they hadn't done in the past. Germans have even gone on a fiscal spending spree. And so I just think that you have strong cyclical economic growth for really the first time in 10 years, 12 years. And I think that's a backdrop for Eurozone stocks finally being appreciated by investors.
Brent, there's a column in The Telegraph by Ambrose Evans-Pritchard talking about how Germany does, though, seem to be losing patience with quantitative easing. They're starting to indicate perhaps they don't want to keep the pedal going for as long as they have for the foreseeable future. This really bleeds into the potential for taper talk tomorrow at the ECB meeting. If they were to start talking about tapering their QE, would that change your view on Europe?
Yeah, it's certainly a risk. And I think of the central banks right now as 3 yards in a cloud of dust. So sorry, Jonathan, just a different football game than you're used to. But they're advancing the ball slowly to try not to get any market reaction. And I think central banks around the globe, I think people need to stop focusing on their day-to-day operations and focus on their action function. And it's still to do more, not to do less. Certainly the Eurozone probably a bit less than the US. But in general, overall, central banks stand at the ready and will continue to do so until there's a cost on the other side. Right now, I know there's talk of inflation, but that cost is still relatively low. Interest rates are well behaved, and they've failed in their mandate for 10 years. They're going to push as hard as they can for as long as they can, as long as inflation allows them to do so. And I just think that as you move into the end of the year, inflation is going to pull back, and that taper talk and everything else is going to subside just a bit.